Hey, traders, Coach T, TackleTrading.com here, and I got another question from the Clubhouse I thought was pretty interesting. This is from Stephanie Bajareno, and Stephanie, great to have you in our Clubhouse, and love the question. She says, "Hi, my fellow traders. I need some help on a trade I placed that I don't know what is happening. When I placed the order, my thought process was to put in the closing order at the same time as the buy order. So you wanted to have the target or the stop with the buy, I'm guessing. My order was filled and the trade didn't go in the way I thought it would, but my sell order was not triggered. I'm attaching a screenshot of when I placed the order in my current monitor tab. I'm hoping to get some help figuring out where I messed up and to see if it's possible to save the trade or just close it out. Let me take a look here, and I'm going to open this in a new tab so I can go full screen on this image. So, and I've not looked at this in detail here, Stephanie, so this was fresh eyes. Verizon 5909. You are going to buy 10 on your order confirmation of the 62.5 call if it is at or below 59.3. Now, if you were waiting for confirmation on the call option, your contingency might have been wrong there, I'm guessing. Let me go look at Verizon. You built this one. What date was this? Well, the Julys were 103-day options at the time, so this would have been a bit ago. Okay, if I look at the Verizon, not Visa, but VZ. So when would the options have been 103-day options? I can kind of reverse engineer this a little bit. Let me go into Think Back, see if I can recreate it the way that you saw it. So July right now is 76, so it would have been about 27 days ago. So the 1st of April, let me click the 3rd, that's 107, let's click up. Okay, this is how your chain looked when you looked at it. And by the way, the chart at that time, when you were looking at it, 4 right there, I see it, I see it. So you had a higher high, higher low, higher high, higher low, higher high, higher low, red candle. Was a big one there, but I can see the pivot confirmation was in there, kind of. It never really did get above your level. Now here's the problem. Look at this right here. So the exact date in question was 4/7/2019. And you actually had built your trade, and I'm guessing here, Stephanie, you have to let me know. You had built your trade that if it was at or below 59.30, I think you meant for that to say at or above. I think you made that mistake right here because you probably wanted to trigger above the resistance point, right? When you were looking at it, 4.7, 4.7. Yep, I'm guessing there's 4.5. Okay. Yeah, if you would have done the trigger, I don't think you ever would have got in. See, you wanted to get in probably above here, but you said below, and it just got you in right away. So then it started to go down, which is not what you wanted. Your first order, and if I look down here, you got filled on 10 contracts, 58 cents. They were the out-of-the-money contracts, 62.5 July options. You traded them for 58 cents. The Think Back tool, so those 62.5s, yeah, you paid the asking price the next day, even though you didn't get confirmation. That would have been a Sunday, I'm guessing. There's Monday morning. The options, you paid the premium right there when you got filled, you know, in between the bid and the ask. That's what they were going for. I then look back at your trade. Okay. Max loss was your cost. These orders all make sense. You then had a stop at 52 cents when it was at or below 58. Okay. The current price of Verizon, it went below 58 a long time ago. So when it dropped down here, you should have been triggered. Now, this was good till canceled, good till canceled. I'm wondering if that order got canceled somehow. I don't see an order on your position over here. So at some point between when you had created the order And when you had taken the screenshot, the order that you had as the stop loss was canceled, either by you or by some automatic default. I'm not sure. We'd have to go into your monitor tab and look at the order, dialogues, and they actually keep track of all that kind of stuff in your account statement. So we could easily look all that stuff up. Your commissions on 10 contracts, you're paying $14.45. That is your bundled rate. You could probably look at a little bit better rate than that, is what I'm guessing. We can go through our Clubhouse. There's conversations on that. And then your new orders, it looks like you have a buy 10 for $62.5 at 58, sell 10 for $62.5 at 52. That was the saved order, but I think that's when you created it. It must have been canceled somehow, Stephanie, because it's not showing up here in your position statement. So it looks like you did originally have a stop loss, but you might have went in and actually accidentally deleted it or something. You can watch those from here. I mean, anytime there's a buy sell on one of your positions, it will say buy sell right here. And from your monitor tab where it says, in fact, I've got my virtual account open. I can show this to you. Like if I created a working trade, it would say working right here. Now, if I wanted to go back and look up Verizon, I can go into the account statement and look up all that kind of stuff, whatever it might be, and then it would show up whatever's here. And if there's not anything here, and managing your orders is a part of your daily process. I'm seeing a couple of mistakes, and I'm going to go back and make sure I read your question, make sure I get it all. Okay. And hoping to get some help figuring out where I messed up. I think the trigger was messed up, and I think you accidentally canceled your stop loss. That's an educated guess. I'd have to go back in and look at your screenshot. So double check those things when you're building these in the future and as you're managing them as well. And then also, if you didn't want to be in the trade, I think there also could be an opportunity to learn here. When this is going down and it wasn't getting you out, you had earnings here, Steph, right? Think about this. Earnings holding your directional calls way up here through an earnings report while you're losing money. I mean, even the day before the earnings here, it was 422. Let's say we simulated your trade here and think back, for 10 contracts, paying 58 cents. On 422, you were down. Okay, stock was down at 58.37, 422. You're down about $167, right? But now, today's data, bringing it all the way forward to May, the weekend. Actually, let's go back one day. Now you're down $400. So if you would have got out even before earnings, which directional calls through earnings, usually in most people's playbooks, you could have saved about $270 on the loss that you were holding. So I think there's many mistakes here that you can correct, and those are all opportunities. I mean, I hope you're taking that with the right intent, just trying to help you here. Number one, double check your orders when you're building them. Number two, double check your orders as you're in a trade and managing it throughout the duration of the trade. You could have identified that you didn't have a stop loss on there at some point. And then number three is manually get rid of a trade if it runs into an earnings report, if you're not designed for that. And number two, if you knew that you were supposed to be stopped out, you could have just manually gone in and sold it and taken a loss. How you handle losers is one of the most important parts of any trading system and any trading execution. And Jimbo and Justin, you guys are awesome. I always see you guys commenting in there, so great job to see that. And, the next one, can I save the trade or just close it out? Well, I mean, let's assess it. For you to make money in this situation, you never know the future. I don't know. But I can just look at probabilities, right? If I look at Verizon, you have from now till July. Now, the July option now has 75 days. The 62.50 is an 8 delta. So the market maker, for you to get back on 10 contracts that you paid 58 cents for, between now and July, for you to get back to a break even, we're most likely going to have to be somewhere above 60. So you'd have to go to 60 today for you to break even, right? That's the problem with time decay. And the longer you hold it, for at expiration, let's do some time steps, 4-day steps right here. The longer you hold it, the further it has to go up. I've added a little tool here, 5, 5, 5, 12, 5, 19, 5, 26. So through the month of May, every 7 days, you're going to have to make another about 30 cents on Verizon for you to actually get to break even. So for you to get back to a break even on this trade, the stock has to go back up here above 60, somewhere between 60 and 62. And to build profit, you'd have to break out of these high points. Now, can it do it between now and July? I mean, that's your job to assess that and apply your rules. There's no doubt. I mean, I can't tell you what to do with a trade. You know, the reality is I can teach you how to think about it. I can teach you where you can structure it correctly, but you've got to make those decisions and assess the risk, and then don't trade with emotion, right? Get the emotion out of there and trade your plan. Stephanie, hopefully this was helpful and we cleared up a couple of your questions. I love seeing people active, and I love the beginner question. There's nothing wrong with it. This is the kind of stuff I want to see you guys in the Clubhouse doing more often, because I know it's hard to ask for help, but that's what we're here for. TackleTrading.com, join the community and get over there in the Clubhouse and ask a question. I'm going to give you a challenge. Ask one question that you've been dying to know the answer to about trading. You know, how to put a trade on, or strategies, or the market, or even something simple. It doesn't matter what it is. All positivity. Get in the Clubhouse, TackleTrading.com.